gold mining stocks is where the value is right now, based on just basic numbers and evidence.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today is Kai Hoffmann from SOAR Financial. Kai, thank you so much for joining us today.
Elijah, I really appreciate the invitation. Thanks for having me on.
Definitely. It's great to have you. And really, when it comes to the precious metal space, people can invest in the physical metal to really be a safe haven, right? But also there are other ways to speculate and possibly profit from the industry. And one of those ways that a lot of people like to learn more about is the junior mining sector. And of course, we can't give financial advice on this show, but we really wanted to have you on because this is a key sector that people really look to when they're wanting leverage, right? When they're wanting maybe to make a profit in the industry. So I'd love to get your perspective on that a little bit later in the interview because you're an expert on this. But first, where are the metals right now? We're seeing kind of a pullback. Now we're seeing a rally today. What is your perspective on where we stand in the metals markets right now?
Yeah, so let me preface this with saying I'm not a technical analyst or big macro analyst, right? So I go often off of sentiment. So I see trends. I read a lot on Twitter, see what people and influencers are saying, and form my own opinion, right? So it seems like I'm still divided a bit because we are seeing a bit of a rebound in the gold price today. We're back at 1717 right now as we're chatting, and not sure what it feels like yet. It doesn't feel like that great breakout, but sentiment seems to be changed, or at least a little more positive this morning on the gold price in general. I'm hoping it's not a dead cat bounce because we will see lower lows, of course, if that breaks down to the downside. But I'm actually quite positive. A couple of interviews we've done and experts I spoke to last week as well said, okay, Thursday might have been that turning around point for gold. Of course, we will have to mark a couple higher highs in this session to break that downtrend. I'm still undecided at this point. I think it is trending into the right positive direction. I'm seeing less negative voices out there. And for me, it feels positive. But we'll have to see. I think 1750 is a mark we have to cross first. We're at 1717, as I said right now. So it'll probably take another couple of trading sessions to sort of instill or to print that positive trend and really make sure it crystallizes.
Now, it seems like fundamentally, for example, one of the main things that drives the gold price is fears of inflation. And we're seeing the stimulus bill pass and everything like that. So what is your perspective on that regarding the fundamentals for precious metals?
Well, it's I feel like I sound a bit like a broken record. They've never been better. Debt is spiraling out of control in the U.S., obviously, which is the main market for the world economy. So safe haven is the number one topic, right? Gold has gotten some competition in terms of Bitcoin, and all the gold investors like myself, we look at Bitcoin and we're jealous, right? We've seen Bitcoin move from, I just checked actually last year, we were at $7,500 now to $54,000. Well, gold is never going to make that return. It's not going to generate that in that short period of time. Gold has had 5,000 years to get to the certain level where we're at right now. Bitcoin is just catching up in terms of value, and it's starting to crystallize that it's becoming a second safe haven asset. We'll see how it goes. At first, I have been also very skeptical on Bitcoin. I don't own any, but it's quite interesting to see what is happening there. And gold is that safe haven investment. Yes, inflation, it is happening everywhere. We see it in certain little bubbles, whether it's the real estate bubble, whether it's going to the gas station. Oil is back to $65 a barrel right now. It's going to make trips a lot more expensive as well. I've heard some places in the U.S. the barrel is back to, the gallon is back to $4.50. That is big because people will have to pay twice as much now to fill up their pickup truck to go on a vacation or on a road trip, and that's going to inhibit spending. And that is inflation we're not talking about, at least yet.
No, when it comes to all these fundamentals, it's well, what is going to happen to the value of the dollar, right? And it's I want somewhere to put my savings, right, that won't deteriorate like the dollar could, right? And that's one of the fundamental reasons to own precious metals, to have something that has survived for, 6,000 years and had value. Now, when it comes to actually investing, really, right, because precious metals, the physical metal, isn't much of an investment. It's an asset because it doesn't produce anything, but it gets you through difficult times. And there's an argument to be made that it can increase in value over those times. But at the same time, it doesn't actually produce wealth. Now, stocks, on the other hand, and the mining industry can actually produce wealth. So what are some of the reasons that people might want to start looking into mining stocks, and especially the junior mining industry, to kind of get a return on their wealth?
Well, that's the number one reason. Trying to get a return, trying to get some beta on those on the gold price movements, right? There are some producers, high cost producers have the highest leverage, for example, where you can get little increases in gold price resonates really well in share price performance, because all of a sudden a $100 move in gold price is 100% more operating profit for a certain company. So you can actually make a lot of money in mining. And the exploration industry is the basis of it all. And that's where you can actually have the highest returns. At gold discovery, copper discovery, for example, as well, like will drive prices higher. Right. So gold, as you said, doesn't pay a dividend. So if you do want to make money in the gold space, you have to buy gold stocks. There's no way around it. Yeah, you can buy an ETF on gold, but that, again, doesn't pay a dividend. Right. It's just tracking what is happening in the physical market. If you want some beta and you want some leverage on those on the gold price, you have to buy the stocks. Exploration stocks are ultra high risk because I like to compare it to biotech companies. You have to go through certain phases. You have to prove it works. You have to find the gold, obviously, right? So the producers are obviously the first way to go, and those are the ones that will be upticking. So if you do see a trend in the producers, actually, and they're like producing a ton of free cash flow. I've read somewhere, and like I couldn't find the statistic for this interview, but they're producing more free cash flow than the tech companies right now, because they're at 1717, or actually last quarter, like the average gold price I think was around 1835 that they realized per ounce sold. That's insane. The free cash flow numbers are crazy. BMO forecasted until the end of 2024 with a gold price of 1850 that there will be $91 billion of free cash flow generated by the top 10 producers alone, right? So that's what the investor gets. Unfortunately, we're forgetting to invest in value stocks right now. It's still very more trend investing and tech stocks investing, which is all fine. But if you want to get a bargain, gold mining stocks is the way to go, in my opinion, right now. That's where you can find them. It's not overpriced. With the stimulus money coming in now, I'm sure it's going to push Tesla back to, I would say, to new highs, but at least going to make Tesla and other stocks rebound. Because I've heard, like Deutsche Bank came out with a study recently that at least 40% of the young investors will use 40% of their stimulus money to put into stocks. Well, there's going to be more hype in crazy Robinhood traded stocks, right? Gold mining stocks is where the value is right now, based on just basic numbers and evidence.
No, I've also heard the perspective that, you can get some gold mining stocks that, will rise tenfold, right? Go up tenfold. And it's just an amazing opportunity, like you're saying. On the other hand, there are some gold mining stocks that just don't go anywhere, and they go, it's an abysmal performance, right? It's more risky, right, than just holding the physical metal, because the physical metal, it can go down and it can go up, but the movements are often not as dramatic, right? So really, when investing in the stocks, how do people pick the right ones? Pick the ones that have a higher potential for gain and less of a likelihood of a very big loss.
Well, that's a good question. It's not an easy one to answer because everybody's got a different risk appetite, right? The highest gains are in the pre-discovery phase before the companies make a discovery, right? So that's where you get the highest gain. Sometimes a producer can 10 times or 10 bag as well, right? As we say, but those are more tricky because that longer term as well. And the producers are they're the ones with the least risk associated to them because you know what you're getting, you know what the costs are, you know what's in the ground oftentimes, you know the mill capacity, so you know what forms of expansion are possible and what kind of growth is possible, right? With gold price moving and even faster moving, you get some, and I've mentioned that before, is you get some leverage on the higher cost producers because they might have been producing at a 20% margin. Gold goes up by $100, let's say, all of a sudden the margins jump by 200%. Right, that's where you get a massive leverage to the gold price. It's a higher risk because those companies, there's a reason why they're producing at a higher cost, are doomed to fail or can fail as well because they can't cover costs if gold goes down $100. Right. So that's the risk and the trade-off you're looking at. Like everybody says, well, you got to look for management. Well, first you got to find out what's your risk appetite. If you want to go ultra high risk, if you're comfortable with biotech investments, exploration might be good for you. Like that's where you could actually find or multi-bag or generate multi-baggers. If you're more on the conservative side, go upstream, right? Go look at the producers. There's still some great value to be had. If you look at some of the price cash flow multiples, it's crazy if you're actually looking for those value indicators.
No, when it comes to the juniors versus the main miners, where's the risk reward ratio there?
Oh, that's a tough question. Again, to answer, I think risk reward, you have definitely way more risk on the junior side, right? And juniors for me is the explorers, but on the producer side, they're still growing, right? So don't expect a dividend. Like, and I'm not investing in gold mining stocks to get a dividend. Oh, I honestly don't care. I want to see growth and share price appreciation. But if you're looking for leverage, I think the junior development companies that are about to go into production as they're building or they're just raising funds, that's, I think, where you get the biggest leverage. If you want, again, lower risk, I think the producers can go there. Like the smaller producers have upside. They can get bought out. You have to look, is the asset actually worth everybody's while? Is it big enough for a buyout? Like, would a Barrick buy it because it's big enough? Or would a other mid-tier producer potentially buy it to diversify? ESG is a topic because some of the miners have single assets in jurisdictions that are questionable. They might have to diversify. So there's some pressure on that front now as well. And then you got to look at it like, would it make sense for somebody to acquire this asset? Right? Is it big enough? Does it turn that the gold that other companies want and need to make a difference on their balance sheet?
When it comes to the price of the spot price of the metals, right? We've seen quite a pullback in the last month or so. So what is your perspective on how does that then impact the mining sector?
So far, we're still good. So the mining sector is impacted, of course, because capital flows just dry up. Right. And we're at Orin Inc. I run a data company as well called Orin Inc. We track those capital flows into the junior sector. So we look at companies with a market cap of less than 1.5 billion Canadian dollars and to financings below $100 million. And we've seen our index decrease a little bit on the gold and precious metals front, while copper or base metal investments, lithium investments, or anything that's related to green wave investments actually has been upticking, right? Even uranium companies have been raising quite a lot of money recently. There was a day where Next Gen Energy and I think it was Yellow Cake raised combined $250 million. If you look at the overall junior market, I think last year we raised $5.5 billion. That's a lot of money in comparison. So that money is rotating right now out of the precious metals more into base metals, battery metals like copper, nickel primarily, lithium to a degree, and then of course uranium as well. So we're seeing a bit of a sector rotation. And I keep saying, like, one analogy I have, like, since our space is so small, it seems like the same $20 bill is just being handed around. Wait 6 months, it's probably going to end up in the gold hands again. So it's going to be quite interesting to watch that.
You mentioned, that there's a movement into a lot of the more the metals related to green energy. Can you expand on that? It's kind of a movement away from gold, you're saying?
Yeah, it's more the speculative money that goes out because they're not seeing it as a safe haven. Or right now we're on the more risk-off investments as well. They see, of course, there's going to be stimulus spending, there's going to be infrastructure spending. We do need a lot of copper. Inventories are low at the CME, I believe. So they're looking at it, and copper had a massive trend. I would almost say it was a hype spike recently where it shot up to $4.30. We're now back to more realistic levels around the $4 mark. It has retreated, but there was a bit of a hype in that sector as well. So money left the gold space. The speculative money left the gold space and went into the copper price. Nickel price has seen a nice run up, but now it's declined as well. So that's been drying up slowly as realism starts to set in. Right. And same with lithium and uranium. So we're going to be looking at that as well. Like the uranium price hasn't ticked up yet, but the market is dried up for product, meaning like new mine production. So we're going to see more in that sector as well until gold becomes more en vogue again. And we're done with the infrastructure part so far. It's going to take a while, but gold needs a little trigger. Maybe it's the US dollar declining. Maybe it's inflation finally making an appearance. Everybody knows it's there. It's just not official yet.
Do you normally, when it comes to investing in mining stocks, do you normally hold for the long term, or do you switch your portfolio around quite a bit?
I'm not a trader, right? I'm a sucker. I'm a hodler. I was like, I hold till the very end. Like the reason I invest in junior mining is like I want to see it through to a final decision, whether it be production, whether it be taking it behind the barn and shooting it, right? Or just a takeover as well. So it's like I'm in for the long term. I like building relationships with management. That's where our strong suit is, just to be close to it as well, right? And to understand what is going on. So that's why I'm a loyal shareholder. I'm not a trader. I don't sector rotate as much. I do have a couple of copper stocks, base metal stocks in my personal portfolio, but that's pretty much it, right? I'm not a trader. That's pretty much the short answer to that one.
Now, when it comes to management, what are some of maybe the red flags to look out for that just like maybe stay away from this company, or some of the positive things that you go like, oh, this is really solid management. This is a really good company?
Again, not an easy question to answer because every CEO is different, right? And I like CEOs that communicate, that understand what is happening. It's 2021 now, so I like to look at CEOs that go with the time, that might be active on Twitter or other platforms. They don't have to be vocal every single day, but I like CEOs interacting with investors, being available for commentary whenever needed, and actually that might have had some success in the past, that come with a good track record, that come highly recommended from other peers in the industry. Those are the guys I look at. And then, of course, it comes down to like the micro stuff, right? Like how much are they getting paid? Are they being greedy? Are they actually selling? Like what's the insider buying and selling looking like? How supportive are they of their own company? Do they drink their own Kool-Aid? Those are some of the factors you can look at. And it's a lot has to do with peer group review as well. Like would others recommend working with them? Do they like this CEO? Is there anything negative going on behind the scenes that you might not be aware of? Does he hold any other directorships? Right? Is he 100% focused on what he's doing? And I don't mind directorships as long as it's not overburdened with 20 directorships at different companies. That takes away from the focus, right? So those are the certain things that I initially look at.
In your perspective, do you think this is an ideal time to really start looking into the junior mining sector? Because really it seems like it would be largely based on where the metals markets are going. And some people are saying, well, they have lower to fall. Some people are saying, oh, they're going to increase significantly this year. We could see, people are calling possibly for, like $50 silver and stuff like that. So is this an ideal time, or should people kind of maybe dip their toes in and then kind of see where it goes from there?
I think that's actually the perfect strategy. Dip your toes in and see where it goes from there. Just to buy a small positions, to add it to your watch list maybe. I think that makes perfect sense. As I said, like even on the gold price, I'm still undecided which way we're going. I'm leaning towards the positive right now, but that doesn't mean you should go all in right now at this point. If you're an anti-cyclical investor, that might be the opportunity right now that we're looking for, but I don't see a clear trend just emerge yet. Financing wise, I think we're on the right track, but we're still waiting for a lot of companies, for example, in the junior space to come out with drill results, their plans for 2021. So we're a couple months maybe early in the cycle to invest, which means we have enough time to maybe do some more homework and look at some good names and really do some research on those names, because that's in the summer, or hopefully towards May this summer, and when real inflation starts to kick in, and it has to with the gold price, with the oil price going higher and other factors, it has to eventually kick in. So we'll have to see how that goes. One distraction, unfortunately, is the stimulus money. I don't think it's going to go in gold stocks. I think most of it is going into the hype stocks. I do hope that some of the investors at least buy some physical. I don't think it'll cause a silver squeeze in that regard with the stimulus money coming in, but I do hope to see an increase in that as well. Like I wouldn't count on it; it's not a big number, but I just hope some investors at least diversify and are smart enough to put some money away into physical. If I was an investor at $1,400, I might actually just buy some silver coins for my kids, right? Just do that. And I know not everybody in the U.S. has to plug financial holes with that money, so we'll see. But to answer your question, I keep rambling on. Dip your toes in. It's actually not the worst idea. And do that. Pick some names. There's lots of information out there, interviews like ours, lots of good conversations out there on YouTube. I personally used YouTube a lot during the pandemic to teach myself new things. Do that and dip your toes in, yeah.
No, when it comes to inflation, it seems like you see that bullish for the mining sector. One comment we received actually from a viewer on YouTube, they asked, well, wait a second, if inflation is running hot, right, then wouldn't the cost of production for these mining companies rise along with the gold price? So why is inflation bullish for the mining stocks?
I wouldn't say it's bullish for the mining stocks per se, because as you said, that's actually a really good point. We could probably debate this one for quite a while. It will be initially great for gold, meaning there's going to be a certain gap where where cost will catch up to the inflation levels. We're already seeing inflation in terms of drilling cost. That's already being we're already seeing that. It's not really being made vocal because it's not game changing just yet, right? But we see an increase in cost for drilling. There's a lack of employees, so you can actually ask for higher wages or like consultancy fees for the drillers, right? We're seeing that already, right? It's not reflective in the all-in sustaining cost just yet, but it's going to creep in. and it's going to factor down at some point. But then again, like inflation, we'll see what the wage increases are. Personnel and people are a big factor. Energy, as I said, oil and gas, oil prices going higher, so that's another factor as well, especially for remote locations where you have diesel power generation going on. So keep an eye on that. But I think there's going to be a bit of a delay, at least over a few months, where you can actually play that to your advantage.
All right. Well, Kai Hoffmann, we really appreciate your time today. If our viewers would like to watch more of these interviews, they can hit the subscribe button and the bell icon so they'll be notified of all the new interviews we're doing. And if people would like to find you online, where can they find you?
Well, they can find us on YouTube as well, youtube.com/SoarFinancial, or on Twitter. I think we're quite vocal on there as well, twitter.com/SoarFinancial or @SoarFinancial. So I really appreciate that, Elijah.
Definitely. And any last thoughts you'd like to leave with our viewers?
Well, I think gold and silver is here to stay, right? Despite the noise you're hearing. If you want to make some money in the gold and silver space, stocks or the mining stocks are the way to go. And take it easy. Don't dive in head first. Find some good names, buy some producers, and then go down the value chain.
Kai Hoffmann, once again, thank you so much for your time, and God bless.
Thank you.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.